in Gelman, Rosenberg, and Freedman's 2017 series of monthly webinars. We had a really nice dreary day yesterday, which is perfect for a webinar, so just our luck today. It's a nice sunny one, but we're going to briefly put aside all our thoughts about opening day coming up or the cherry blossoms. And instead, we're going to talk about our topic, which is effective IT controls for financial statement audits. Is your organization at risk? So before we start, we have a little bit of housekeeping. We have a couple ways to get in touch with us if there's technical difficulties. The primary way is to contact WebEx directly at 1-866-229-3239. There is an event number, 622-670-522. And there's an event password, which is GRF 2017. There is also a chat function, which is the little speech bubble icon on the top right part of your screen, so you can use that as well. We are making a recording of the webinar, which would be available to anybody afterwards. And there's also 1 credit of CPE available. To get the CPE, you have to do a short evaluation survey, which will pop up on your screen at the end of the webinar. So that tells me to remind you to turn off your pop-up blocker. Occasionally, we have that causes that problem. During the class, there will be 3 words that we'll offer. These are not in the slides, but we'll be very clear about them as when we hit them. You'll need those 3 words when you do the survey to get your CPE. And also a reminder that you can't get CPE unless you fill out the survey. There's also on that screen a web address to download the PDF of the presentation. Which is our website, grfcpa.com /media/329PDF. Web learning objectives today in general are to provide attendees with a better understanding of effective controls for financial statement audits. So we're still within that realm, but more specifically talking about IT. And this is 1 credit of CPE. The agenda today is here. We'll have 2 different speakers. The first will cover points 1, 2, and 3, which really give an overview of what we're talking about. What is information technology controls? What kind of groups are they? And what are the objectives? Then we'll take that and have a second speaker, which will apply that to an audit setting. Why do auditors care about it? What are the risks involved? And if auditors care about it, then you can be more prepared for your audits by thinking about it in advance. Here are your speakers for today. My name is Ian Schuman. I'm a partner in our client services group. I'm on the far right there. You also have Kashif Ali. He's in the middle. He'll be talking about the first part of it. Kashif is our Director of Information Technology, so he's in charge of 100-odd people and keeping us safe and productive from home or office or client sites or anywhere in the world if you know our practice, so he's got a tough job. There's also Ricardo Trujillo. He's a Senior Manager in our audit side, and he also specializes in IT audits. So this is we'll have our first polling question. There's going to be a couple of these throughout the session today. And I'm also going to give you our first word, which is security. So security is our first word. And as we get these polling questions, the question is, what is your main focus in regards to securing your network? A, secure financial and sensitive data, or B, secure hardware and software applications. So we'll give a little bit of time here to look at that question, and you should get a pop-up on your screen which will let you select A or B. Okay. So that brings us to the first slide in Kashif's section. So Kashif, thank you.
Thank you, Ian, for the introduction, and thank you everyone for joining us today for the webinar. For the first part of the webinar, I will be talking more about the IT side of things and how they impact what are the controls and how they can impact the financial side of things, which Ricardo will come in later and he will talk about that. In regards to IT controls, they're also known as the IT General Controls, ITGCs. And they're the controls that apply to all system components, processes, and data for a given organization or any IT environment, a company. And the objectives of the ITGCs are to ensure the proper development and implementation of applications, as well as the integrity of your software, your hardware, your data files, and all of your computer operations. There are some common ones that we'll talk about today. Main one is computer operation controls. You have logical access controls over infrastructure, applications, and data, program change management and development control, data center physical security controls, system and data backup and recovery controls. So let's talk about each one of them individually. Computer operation controls are basically consist of your policies and procedures that are executed within the IT department that applies to every system in that organization and every other software and hardware that it relies on. Example of that would be your journal ledger, your accounting, your payroll, your accounts payable system, and any other file transferring system that you use. For example, if you are transferring if email attachment, do you use email directly or do you use a third-party attachment system, which should be encrypted? Next in the IT, the common IT control would be logical access control over infrastructure, application, and data. What this really means is that how do you control access to different systems in your organization? You should have a person who would give access to systems and remove access to systems in case somebody leaves, retires, or a new hire, that sorts of things. So you want to have someone dedicated to do the job, and then you should have a backup person to do the job. Network admin access, this really it depends on how your organization is set up. Your network administrator, your IT guys should usually have access to everything in your organization. But you also want to make sure that the access is logged because they should be accessing your databases to troubleshoot, to fix problems, but there should not be any other need to be in a database when they should really be working on it to fix it. Password requirements is a logical control. And what this really means is that your password should really be complicated password. You should have a small letter, you should have a capital letter, you should have special character, you should have a number. The old news is 8-digit or 8-letter or 8-character password. Now, I don't think that is sufficient enough anymore. It should be, you should think of a phrase instead of a word. The password should be longer than 8 characters, and it's very important to have passwords. And you should also set a time limit for 30 days, 60 days, or 90 days to expire. Passwords should also, you should not keep the same password for every single software or application, because if one password gets hacked into, you pretty much have every other system that's hacked into. Access logs and audit logs. What this really means is that when you have a user who accesses the system, you should go back on a weekly basis, monthly basis, yearly basis, whatever the procedure is in your organization, to audit the log to make sure that the person who said access the system actually accessed the system. It's important to have logs. That's how you control in a logical sense. Encryption is also important. Suppose you have a user who travels overseas a lot, or who's in Europe and gets their laptop stolen. Is the laptop encrypted? Is the data on the laptop encrypted? Is the system that the user or someone who stole is trying to access, is it is that encrypted? So there are several things in your logical access controls that you can look into. There are more, but these are the most common ones that you should be looking at. Also, another logical control is, because it's logical, you have to think of, is the task completed and is it accurate? Because it involves your software, it involves not one user, but there may be several users who are involved in the process. So you want to make sure the task is completed accurately. The next general control is program change management and developmental control. What this really means is that if you have incorrect changes, it's going to result in incorrect data. And what happens if you have incorrect development or implementation of a system? You're going to end up with bad data. So there are two parts to it. Incorrect changes are going to result in incorrect data, and incorrect system is going to result in bad data. You can have a team of people enter in all the financial data into a system, and then end result is no good, it's 0, because it's a bad system. Procedures for making changes in the software, you need to have implementation process behind it, you need to have testing behind it, approval, and documentation. You will hear me say documentation and logs a few times, because those are your keys. It's very important to have documentation behind everything you do. It's very important to have logs behind everything you do. So when you have a software development guy working on the coding, you need to make sure there's a process, there's documentation, and it's tested and approved before it's applied. And what happens if your software developer decides that he's going to take a vacation or a day off, and you have an emergency and someone else needs to make changes? You also need to defer back to your documentation, and you need to have a backup. And what happens if you have a data move? You're moving your accounting software to a different server, and it needs to be updated. There needs to be some sort of control around it. You want to test your updates. You want to make sure the patch management team is patching when properly. So there are controls around it. Like you don't want to update something that is not completely tested, because how often we've seen our computers are updated and it breaks another program. That's because that update is designed to do update for that one program, but not the other, so it can break the other software. Next in our controls is data center physical security controls. Guys, this is very important. You want to have controls behind your servers. You want to know who's accessing your server room, your data center. And this doesn't apply just to your data center. It also applies to your building. It applies to your floor. Having logs behind it is extremely important. For internal users, if Joe walks in the room at 5 a.m. on Sunday morning, the log should say Joe walked into the room 5 a.m. Sunday morning. There should be a log. And what happens if your AC breaks in the data center, or you have a power outage? You need to have an outside vendor go in the data room. You want to have a physical log for that. And having these logs are no good if you don't have an internal audit. You need to have an audit for accuracy to make sure these logs are good, so when it's time to, if something goes wrong, there's a hack, there's a breach, somebody stole a file, at least you can have someone to go back at the logs and see who was there at a particular time. So let's move on to the next slide. It's taking a little bit of time here. So system and data backup and recovery controls. This is very important, especially for an organization like ours here at GRF. I have my backup set up every 15 minutes, and that's because the type of work we do here, the type of services we provide, you can look around your organization and infrastructure and decide how you should have it. Most organizations have a full backup daily or full backup once a week, and incremental once a day, usually during the night. So you can decide at what frequency you would like to have a backup. What happens if you have a backup, it's successful, but when it's time to recover a file, it doesn't work? I have seen that happen before. You want to make sure that your backups are tested, not daily, not weekly, maybe once a month, maybe every 2 weeks. You have to figure that out. And also, how frequently you make your backups, it depends on what are the critical components in your organization. You would have to sit down and decide. For example, in my organization, I know emails are extremely important because we have to talk to our clients regularly, frequently, and 24 hours. So emails is critical. Our file system is critical. We make sure the security is properly done. So those are the servers that I back up more frequently than the other servers. Next, under the backup and recovery control, you have disaster recovery plan and business continuity plan. What this really means is that if you have a flooding around your area, or a tornado, or your building goes on fire, data center is burnt down, how do you come back from it? How do you run your business from it? You need to have a disaster recovery plan and a business continuity plan. A lot of times we overlook it because we don't hear about it that often, but when it happens, it's a disaster. There needs to be a plan behind it. Business continuity plan works the same way. They go coincide. They work side to side. So you need to have something around it. So we're going to move over to the control classification side of IT control. And there are pretty much 3 classifications. Preventive, which means it happens before an incident, before a breach. You figure out what could happen, and then that falls under your preventive. Then you have a detective class, which means at the point of it's happening and what are you looking at to fix it. And corrective is after the fact. After you're dealt with the disaster, how do you come out of it? So preventive class, you detect a problem before it arises, which means that you need to have qualified personnel in the IT department, somebody who can, when there is a disaster, somebody who can get on it right away and figure out what needs to be done. Monitor operation and input. That means you need to have procedures and policies behind things. So once you have procedures and policies, you prevent a disaster from happening. Try to predict potential problems. Use edit checks. So before you complete a month worth of reports, in between, you probably want to have accounting check your files occasionally and have random checks, edit checks to make sure your formulas match. It works the same way. You need to have edit checks. Segregate duties. This can go back to the access control and encryption of software. Segregation of duty means if you have someone in your accounting department or payroll department who's cutting a check, someone else is signing it, and then someone else is going back to look at the register to make sure the check didn't cut to the wrong person. So it needs to go back to the access control, segregation of duties. Control access to physical facilities. This goes back to the server room security. If you don't have logs, you're going to have problems because security is not going to do any good when you want to go back and investigate an issue if you don't have logs. So that's a preventive class because you're doing it beforehand. And again, use documentation. Documentation is important for everything. You have an IT guy that you rely on, and all of a sudden he decides he wants to leave, and if you don't have any documentation, you don't even know what is on your network because a network can consist of a million things. So you need to be aware of what you have on your network, and documentation comes into play. Detective class is use control that detect and report errors, omissions, malicious act, hacks, breaches, that sorts of things. For example, hash totals, checkpoints in production job, duplicate, checking of calculations, review of activity logs to detect unauthorized access attempts, You want to secure code reviews, software quality assurances, and internal audit functions. Software code reviews really means is that if you have a software developers, and I know a lot of companies, they use in-house built softwares for their financials and their accounting systems. So if you have a software code, you want to protect it. If I can read your software code, I can bypass it, I can probably break it. So you want to make sure that it's secured. And again, there are documentation. It goes back to documentation. Corrective class. Minimize the impact of a threat. What does it mean? It really goes back to business continuity plan. You need to have something in place, or at least have a team. Fix problem discovered by controls. Your disaster recovery plan. So you had a disaster, and now what kind of classification you have to put behind it? It's the disaster recovery planning. Identify the cause of a problem. That's where incident response planning comes in. You need to have a team that are already assigned several tasks. For example, if you have a breach, you want to make sure that you have somebody who is going to contact the media, somebody who's going to contact your insurance carriers, somebody who's going to contact your clients. And so there needs to be there needs to be a corrective class. Then you have correct errors arising from a problem. Backup procedures. It goes back to if you have a backup that is successful and now it failed. What do you do to fix that? Next option in our corrective class is modify the systems to minimize future problems. What this really means is that when you have a system that in your preventive class that didn't work, and now you're done with your disaster, you're back in business, what do you do to fix it? You have to go back to your preventive class and rerun your procedures. Obviously, there is a problem in your procedures that didn't fix it. So you would want to revisit your procedures, your policies, and make sure that it does not happen in the future. Next, I'm going to talk about the IT control objectives. When you have IT controls, you want to have objectives that you are trying to meet. And IT control objectives provide a complete set of high-level requirements for effective control of each IT processes. Some of the ones that I know of are desired result is achieved by implementing controls around all system processes by utilizing policies, procedures, practice, and organizational structures. Another objective is designed to provide reasonable assurance that the business objectives will be achieved and undesired events will be prevented. So those are the two main ones. So you have desired result is achieved by implementing controls, and then designed to provide assurance and prevent future problems. There are several IT controls objectives that an organization can have depending upon the type of services it provides and type of business it does. Some of the common ones are protect your asset, which means you want to protect automated systems for improper access. So if you have a user who's accessing your database through a VPN connection or a Citrix connection or a third-party connection, you want to protect it. It obviously is connected through the internet, so you want to make sure that improper access is somehow blocked, and that's your objective, and that's what you want to do. You want to make sure that there are controls behind it. Ensure system development cycle. Financial software and applications are developed in a reliable manner. You want to make sure that whatever software you're using, you want to make sure that it is meeting the objective. I have seen where companies purchase a software and the 90% of that software is not even used, maybe the 2% or the 10% of the software function is used. So you want to make sure the objective is met. You just don't want to go ahead and spend tons and thousands of dollars and not getting what you need to get out of it. ensuring integrity of sensitive data and critical application system environments, including your accounting, your financial management information system, and customer data. What this really means is that you want to make sure, your objective is to make sure that your critical applications like your payroll software, your accounting software, that is secured because it has sensitive data. It has users' social security numbers and other accounting information that needs to be secured properly. Accuracy and security of the output. Yes, you have information. It's not good if it's not entered correctly and if your software is not good. And if the information is good, is it secured? You want to make sure that, yes, we have great information. Is it secured? Can someone else access it? Your objective is to make sure no one can access it. Only authorized personnel can access it. Extremely important. Database availability. That's one of the things that IT guys struggle with all the time because we have to have database available all the time. At the same time, our objective is to also keep it updated because that is very important as well because updates are there for a reason. And taking this database down is always a problem. So you want to make sure your objective is to figure out that how do you secure the database as well as how do you make it available so your users or your clients, if they are working random times, different time zones, different countries, they don't have that issue. Your objective should also be to make sure the appropriate identification and authorization is allowed, which means users that should have access to a software are the only ones that can access it. You don't want somebody logging into your system and then a year later you find out there's a check's been written to unidentified source. So those are the kind of things that should be included in your objectives. Disaster recovery and incident response plan, we just talked about it. Disaster recovery comes back over and over again because you don't see a disaster until it's there. And a lot of times in IT, some of these disasters are not pretty. You have to have something in planning, something in motion, and usually disaster recovery plans are on the back burner for most executives, but it should be up there. Ensuring that outsourced IT processes and services have clearly defined service level agreements, which are known as SLAs in IT. We just call them SLAs, and contract terms and conditions to ensure that your company's assets are properly protected and they meet business goals and objectives. What this really means is when you have SLAs, you have a contract with a third-party vendor, Microsoft, Dell, HP, Lenovo, whoever you have a contract with your service level agreements, they meet the objectives for what you are trying to accomplish. If your software doesn't do what you need it to do, it's waste of money, it's waste of resources. You want to make sure that if your software is supposed to do certain tasks in your accounting, financial statements, it needs to do that. If it doesn't do it, then you have to rely on a second system. It's just a waste of a lot of time. So you want to make sure that your objectives are met. So I get this question all the time, is that, so with all this IT infrastructure in place, with all this technology, how do I know, or how do I figure out where to start? What do I need to look into? Where is the problem? And I always tell them, look at the unknown. Do a penetration test. What penetration test is that you would have a team of people that would come in or a company that would come in and try to break into your system. That's not the same as vulnerability scan. Vulnerability scan is, it can have false positives, so you want to have the true penetration test. So the purpose behind protecting all your assets really goes after the financial side of things and the accounting side of things and the payroll side of things. That area is very sensitive for our business and for a lot of companies. So how do you figure out if a process is broken? You need to have an IT audit. IT audit is Ricardo will talk more about this, and Ricardo and his team usually they go in and perform an IT audit and figure out where the breaks are, what needs to be corrected, what is not right, and how it is a problem. And a lot of times you will notice that in the IT audit we figure out that Sarbanes-Oxley, we all well aware of that. The procedures and the policies are not met there. So you want to make sure that that is looked onto as well. Next, I am going to pass my slides over to Ian and see where we can go from this. Thanks.
Okay, thank you, Kashif. That is going to bring us to our second polling question. Second question is, has your organization had an IT audit performed? And it's ABC. A is yes, multiple times, so this is a regular thing for your organization. B is we did it once, and C is no, we haven't done that yet. And so while you are responding to that question, I'll just say that you will see the results pop up. There's a little bit of a delay, but in a minute or so, you'll see the results pop up there. So I'll give you a little bit of time to select A, B, or C here before moving on to Ricardo for the second part of the presentation. Thank you.
Thank you, Ian. Thank you, Kashif, for the presentation. Good afternoon, everyone. Good morning, actually, for us on the East Coast, and probably good morning for everybody on the west side of the United States and everybody where you might be joining us. Thank you for attending our March webinar. Kashif has discussed the technical area of our webinar, and as he mentioned, I will be getting more into the internal control aspect and the financial aspect where IT controls have impact over organizations in relation to financial statement audits. So let's start with our first section, which is the effect on IT, the effect of IT on internal control. So an entity's use of IT may in fact affect any of the 5 components of internal control, the COSO components, which are relevant to the achievement of the entity's financial reporting, the entity's financial operations, compliance objectives, and its business functions. For instance, an entity may have or may use IT to support a particular business unit, a particular function, or a particular activity, such as an accounts receivable module, or a system that controls a donor's database. That's where the entity may use IT to support that particular area. At the same time, the entity may have complex or very highly integrated systems that share data and that are used to support all aspects of the organization's financial reporting, the organization's operations, and also compliance and objectives. It's key to highlight that the use of IT also affects the fundamental manner in which transactions are initiated, or authorized, or processed in a nutshell. And we have manual systems, and we also have automated systems. In a manual system, the entity uses manual procedures and records in paper format. Controls in such a system also are manual, and they may include procedures such as approvals, reviews of activities, reconciliations, and follow-up of reconciling items. Alternatively, an entity may have information systems that use automated procedures to process and report transactions to the financial statements. In this particular case, the records in electronic format replace those in paper format or the paper documents. But it's very important to highlight that an entity's mix of manual and automated controls, because there's always going to be both. There's going to be those manual and those that are going to be automated, vary depending on the nature and the complexity of the entity's use of IT, which we will discuss a little later on the presentation. Moving on to the next slide, IT also poses specific risks to an entity's internal control, which Kashif already alluded to these earlier in the presentation, so I'm not going to get into the detail of these risks. But I want to highlight that the extent and nature of these risks to internal control vary depending on the nature and characteristics of the entity's information system. Again, the use of IT in the organization dictate how risky these items or these risks that we have on the slide pertain to the organization. For example, multiple users, either external or internal, may access a common database or information that tends to affect financial reporting. In such circumstances, the lack of control at the entry point of that database may compromise the security of the database, therefore compromising the data which is included in that particular database, which then turns into financial reporting that could be inaccurate. When we have IT personnel or users which are given or whom are given access beyond those that are necessary to perform the regular assigned duties, then we have a breakdown, or we could possibly have a breakdown in segregation of duties. So this could result in unauthorized transactions. Again, as I said, changes to programs, because it's not just data, it's also programs that could change the output, and it could affect the financial statements. So again, the nature and characteristics of an entity's use of IT in its information system affect the entity's internal controls. So something to highlight there. Now, I want to get into when is the best time to have manual controls and not have manual controls in the system. When are these more suitable? So the manual controls tend to be more suitable when we have large, unusual, or non-recurring transactions. The manual controls also where misstatements are difficult to define, and also monitoring the effectiveness of the automated controls. This is where the manual controls are more suitable for the organization. And as we know, these are performed by people, so there are some specific risks related to those particular controls in the entity's internal control system. Now, the manual controls may be less reliable than automated because obviously they can be more easily bypassed. They can be more easily overwritten, and that's something that we look at when we perform our financial statement audit. Now, on the other token, by the other hand, manual systems may be less suitable. So you probably don't want to use manual systems when you have a high volume of recurring transactions or in situations where errors can be anticipated or predicted. This can be better tackled with the use of automated controls. Also, where control activities where the specific ways to perform the control can be adequately designed and automated. So if we can automate these controls, then it's better just to use an automated control, obviously, because it's easier than having a manual system handle that particular piece of it. With that, we're going to move to the next section, which is what's the relevance of IT controls on financial reporting. So the information system relevant to financial reporting, which again includes the accounting system, consists of all the procedures, now again, whether these are automated or manual, and also records which are established to process and report entity transactions and to maintain the accountability in the relation to the assets or liabilities or net assets which are reported by the organization in their financial statements. Now, the quality of the system-generated information affects management's ability to, again, make appropriate decisions in controlling the entity's activities and eventually to prepare reliable financial reports. So we need to make sure that the IT controls are working correctly, because if they are, we're going to get data that's correct, and then governance and management are going to be making decisions based on that data. So we need to make sure that that data is accurate to the best possible. Now, what the auditor should obtain sufficient knowledge of the information system. And the reason for that is because we need to understand the classes of transactions that the entity operations, the most significant transactions that end up on the financial statements. We need to understand the procedures, again, whether they're both automated or manual, by which those transactions are processed and, again, end up in the financial statements. We also need to understand the related accounting records. Again, are these electronic? Are they manual? Which support the information of the specific accounts in the financial statements. We need to also understand how the information system captures all these events and conditions which are significant to the financial statements. And we also need to understand the financial reporting process which is used by the entity's financial statements. How are they coming up with their accounting estimates? How are they coming up with the disclosures? How are they arriving at the final figures of the financial statement? So this is very important, and that's something that we need to understand as auditors when we come in and do the financial statement audit. When IT is used to process or report transactions or other financial data, which is included in the financial statements, the systems may include controls related to the corresponding assertions for significant accounts, which again, we need to understand when we perform the financial statement audit. So you can see the whole relationship between IT controls and the figures that end up in the financial statements. In a nutshell, within the financial reporting process, we need to obtain an understanding of both the automated and the manual procedures that the entity uses to prepare not only their financial statements, but also their related disclosures. And we need to understand how misstatements may occur during that process. Now, what procedures are we talking about? Well, let me give you a few examples. For instance, we have the entering of transaction totals into the general ledger. So we may have batches that come from a donor database, and those are batched into the general ledger. So that's a procedure that we need to understand. How's the initiation, the authorization, and the recording of journal entries in the general ledger happening? Are those automated? How are they being approved, and so on and so forth? Also, the initiation and recording of either recurring or non-recurring adjustments to the financial statements. Because we may have recurring adjustments for either depreciation or so on and so forth, but we may have non-recurring adjustments. How are those happening? Another procedure, as an example, is the combination and possibly the combination of general ledger data. We have possibly different organizations, and we need to combine that particular data. And also how the preparation of the financial statements and disclosures is actually happening. So it's very important to highlight that we should obtain an understanding of the entity's information system overall, which is relevant to the financial reporting in a manner, of course, that it's appropriate to the entity's circumstances, because each entity is different. So it depends on how much involvement of IT the entity has, then that's going to dictate what we do in the audit. Okay, now that takes us to the next slide, which is we need to also assess the organization's level of IT sophistication under audit, because that will allow us to understand and to evaluate the general scope of audit procedures that are required for the IT controls, because we need to have the IT controls. So, but we need to understand the level, the overall IT sophistication of the organization. So it's important to highlight that there's a lot of audit guidance that suggests that the effect of IT is not necessarily related to the size of the entity, but rather the level of sophistication of IT. And that makes sense. I mean, it is possible for a small company, for instance, to rely heavily on IT for delivering its products or services or serving its donors, and on the IT controls, and also on IT controls in financial reporting process. So that entity will likely be considered at a medium or high level of IT sophistication, as we can see it on this particular chart. However, they could be small, but we could have another entity that has more than 100 employees that's using commercial off-the-shelf applications. They might have a single server for financial reporting. In that particular case, that entity could be considered on the lower end of the spectrum of the IT sophistication. But for simplicity's sake, you know, we say the IT sophistication can be measured as low, medium, or high, or it may also be referred to as level 1, level 2, or level 3, as we can see over here. So this is a good chart that everybody can see, and they can gauge where the organization stands, you know, how sophisticated are they in the nature of IT. But, you know, this helps us determine the extent. So you might have an auditor come in and say, well, you're probably a level 1 or you're probably a level 2, and this helps us determine the nature and extent and scope of IT procedures that we need to perform during the financial statement audit. Again, the more sophisticated the entity's IT, the more likely there will be more IT procedures, and those procedures will be stronger in type. So something to definitely keep in mind when your next financial statement audit comes up. This will take us to the next polling question, so I'm going to let Ian post it. Go ahead, Ian.
Okay, so this is question number 3, and the question here is this. Here's that chart you just saw a minute ago, which the auditors might be using to assess the risk in your IT systems as low, medium, and high. So when we have that, if you know the auditors are going to think about this, then you can think about it in advance and see what they might do. So what do you think of your system, whether you would be a low, medium, or high risk? And I'll also give you the second word, which is network. So network is our second word.
Thank you, Ian. So we'll give like maybe 10 seconds or something like that, a little bit of time for people to answer the question. But we're going to go ahead and, for the lack of time, we're going to move a little bit here. So I'm going to discuss the 5 areas of IT general controls which need to be evaluated in every financial statement audit. So there are 5 areas of ITGCs which are identified as the essential areas in the IT space that would need to be examined, even if briefly, by auditors, which are the areas of IT which potentially may introduce risk to the financial statements, which is the risk of material misstatement. Now, while the applicability of any of these areas is only dependent on each organization, as we talked about, and its control environment, as a group altogether, they do represent the most basic and common areas of IT of controls that need to be examined during the financial statement audit. So we'll go through each one of these very quickly here. So the first one is the IT level controls, and these are related to the entity's environment. These controls are those employed by management over IT, over the IT function as a whole or in general. They provide an umbrella of controls over the acquisition, implementation, and management of the IT used in the entity. For example, IT governance would be a part of the IT entity level controls. Other controls in this area may include IT policies and procedures, IT management, planning, strategy, human resources, and IT risk management. The next area of ITGCs is the change management. These are the controls that management has in place to ensure that all changes in the IT portfolio are authorized properly and implemented securely, as it says here on the slide. It's key to identify that change management applies to both, not software and hardware, so it's not just one or the other. So that's something to definitely keep in mind. What kind of change management does the organization have in place? Do they just go out and implement a system and they don't do any kind of testing or any due diligence? That's what we're looking at in the audit world when we come in and evaluate your ITGCs. The next area is the information security relates, and this relates to the financial audit because of the inherent risk that an authorized party could get access to financial reporting applications or data and intentionally or unintentionally create misstatements in the data. For instance, an employee may accidentally be given access to an application, and that person may decide for various reasons to make changes. Now, without proper training or controls, that person could key in transactions incorrectly, therefore creating misstatements. So we need to evaluate this. And it's also key to understand that the security in this area is related to both physical access and logical access. So you might have your auditors walking around your office and saying, show me your server room. I want to see what it looks like. They're really looking for this physical access. Is the server room locked? Is it just accessible by the key people that need to be accessing the server room? And logical access could be done over an application. They might be testing the proper credentials or logins for a particular software that's key in the financial statements or key within the organization. And I know Kashif already alluded to this. The next one is the backup and recovery. Again, we talked about this already. It relates to the entity's ability to recover from a critical event, which causes the loss of data in our systems. And it could be as simple as restoring a backup, as Kashif talked about, or what's the data recovery plan. But we need, as auditors, to evaluate and assess this particular area. We need to assess the entity's backup and recovery plan as part of the audit because it poses a risk of material misstatement on the financial reporting. What happens if the organization loses all its data? How are they going to reconstruct their financial statements for the last 6 months? So again, a huge risk in terms of material misstatement over here. The last key or the last area of ITGCs that we need to look at, and I know a couple of questions came from in this area, it's the third-party IT providers. Now, it's the use of third-party providers who provide some service to the entity, which is relevant to the financial reporting. That's something that we need to keep in mind. Now, the entity may outsource functions of its IT, for example, help desk, network support, and now there's a lot of cloud services out there that we need to be aware about. So for those third-party providers whose impact is significant to the financial reports, entities and as auditors, we may request a SOC 2 report, a SOC 2 audit report to review the effectiveness of the IT controls over the service that's being provided by the third-party IT provider. Okay, so that's something that we could possibly obtain. A second aspect of using third parties is vendor management. Something to keep in mind is when a third-party provider is relevant to risk of material misstatement, we as auditors need to gain assurance that the vendor selection process leads to the effective vendors and services, that an appropriate risk mitigation posed by the third-party provider has been implemented. So I'll touch more a little bit on that at the end. So we also want to leave you with some key takeaways from this presentation, from today's presentation. So I'm going to allude to some of these, and then we'll let Kashif discuss some of the other ones. So the first one is we need to evaluate events and conditions that may indicate the risk of material misstatement. What are some examples here? Well, are there any inconsistencies between the entity's information technology strategy and its business strategy? Have there been any changes in the IT environment? Have there been any installation of significant new IT systems related to the financial reporting? For instance, a new accounting system, a new ERP, or the organization all of a sudden decided to go on the cloud. These are areas that pose risks of material misstatements to the organization. We'll move on to a few more over here. Now, we also need to, I would say, go back and review the 5 areas of IT general controls that we discussed earlier before your next financial statement audit to make sure that they're properly implemented. Do we have them properly segregated in the organization? Are they properly documented? And finally, one of my other key takeaways is probably consider using a framework such as COBIT. Now, COBIT stands for Control Objectives for Information and Related Technology, which is developed by ISACA. And ISACA focuses on centralizing all this source of information and guidance in the field of auditing controls for computer systems. So it's a very good source. And it provides, now COBIT provides a comprehensive framework that assists organizations in achieving their objectives for the governance and management of IT. So simply stated, it helps organizations create optimal value from IT by maintaining a balance between realizing benefits and optimizing the risk levels from the IT perspective. So I'm going to let Kashif talk about a couple of more of the key takeaways. So Kashif, go ahead.
Thanks, Ricardo. With regards to COBIT, that's definitely a great framework to follow, and that's what Ricardo and his team does to go in and coincide with COBIT framework to figure out if there are any issues there. For my takeaways, I would definitely recommend creating a set of policies and procedures. Very important policies and procedures around your logical controls, your physical controls, your security access control of your data center, and like I said earlier, not just your data center, your suite, your floor, your building. Very important to have security and logs and documentation. Logs are important. Your security access control doesn't do any good if you're not creating logs and you're not monitoring the logs. So logs are extremely important, and auditing the logs is important. Lastly, backup and recovery. Like I said earlier, your backups are extremely important. Figure out your key components in your network and have your backups from there. And if your backups are not tested, your recovery is failure. So make sure your backups are good and test it regularly. I'm going to pass it on to Ian, and we'll go from there.
Okay, thank you so much. So that is going to bring us to our final polling question, which is question number 4. Have any of the IT-related questions discussed during this presentation? There you go, sorry. Has any of this come up during your last financial statement audit? Just curious whether this is something that your auditors have been bringing up, and if this was something that was discussed. And while we have that polling question open, I am going to, I guess, kick off the Q&A. We have a couple minutes for that. And Kashif, we had a question about what happens if we don't have the data center, which is those physical servers, in-house? So if that's something we're using a service provider for, do you have any thoughts on that?
Yes, great question. When you don't have in-house data centers, you are relying on cloud services and you're relying on a third-party vendor. You want to go back to the what we talked about in objectives. You want to look at your SLAs. That's where you see what type of security they have, what type of logs they're creating, how your server is stored in their data center. Cloud is basically another data center, just not on your premises. So you want to see the logs. You also want to know how secure is their data center. And in a lot of events, in a lot of companies, I have seen where the data centers need to be within the country, not outside the country. So you also need to look at the Sarbanes-Oxley to make sure that your cloud services are following that as well, especially in the finance and accounting side of things. So there are several components to this mix. But again, you want to go back to your SLAs to make sure that they meet your objectives.
Great. And I also wanted to add our third word. So this is the last word that you'll need. It is framework. Framework. Thanks very much. And then, Ricardo, we had a question about what is COBIT. So do you want to talk about what COBIT is and how you use that in your IT audit process?
Absolutely, Ian. Thank you. So yeah, COBIT, it's a framework, as I was talking about earlier during the presentation. It's a framework, and it stands for Control Objectives for Information and Related Technology. So just like the AICPA gives us frameworks, we also have frameworks from the IT world or from the IT audit perspective. So COBIT is one of them, and it's developed by an organization called ISACA. And ISACA focuses on centralizing all the source of information and guidance in the field of auditing controls for computer systems. So it provides, now COBIT provides a comprehensive framework which assists organizations in achieving their objectives for their governance and management of IT. So it's a really good framework to look at. For instance, it's interesting to note that COBIT has identified as many as 37 IT processes which are generally used by an organization of all aspects, or nonprofits, commercial, and all these kinds of organizations. So if you go to the ISACA website, isaca.org, you might be able to grab a copy. COBIT 5 is the latest version at this point.
Great. Okay. And so we're getting the results of those polls, and that's it's interesting. It's split very much evenly between yes, not yet, so it's pretty close. And I think I would expect, as accountants, you know, as we move towards automating transaction processing and the resulting reporting on that, then I would expect the IT controls to be more of a factor, an increasing focus in audits as we go forward. All right, so that is going to bring us to wrapping up. I do want to tell you about the next webinar. It is the end of April, so April 27th, and that is going to be Understand Employee Benefit Plan Audits and Prepare Your Organization for the Changes Ahead. So that's another type of audit. And then lastly, I wanted to end with just ways you can get in touch with us. There's our website. We're on Twitter, Facebook, LinkedIn, Instagram, and there's email and phone numbers for all three of us, Kashif, Ricardo, and I. So I wanted to thank everybody for participating and for joining in, and also a final reminder that when we end the session, you probably need to have your pop-up blocker turned off so that the survey will pop up. So thank you all, and enjoy the rest of your day.